Good evening and welcome to the Accendo Traders Group. This is our daily stock market trading plan for Tuesday, December 29th, 2009. Our website is blog.accendotraders.com where we put together effective video technical analysis trading plans on a daily basis. Our trading plan helps you stay abreast of what's coming down the market, helps you to stay on the right side of your trades, especially as you're scanning for new trades, but it also keeps us focused and disciplined so that we can cut down our research time and spend time with our family. So today, well, we had the dollar dip and then rebound, which kind of correlates with us opening higher and kind of selling off into the close a little bit. At 10 o'clock, we had the consumer confidence meet expectation. There was pretty much absolutely no reaction to that number. Before the market, we had Case-Shiller show the lowest decline in 2 years. Pretty much no reaction to that. So overall, we had the broader market failing to find leadership. And what's really is just another way of saying nobody's here to give leadership, to put any momentum into trading, because again we had light volume because people are not trading this week. What was interesting was that the market actually started off going into close. I had actually shut off my Thinkorswim, shut off my global futures, Turbo Trader 2 and GS Trader platforms, and just turned them off and got out of the chat room, and then we sold off in the close. So that was interesting. We had 3 out of 10 sectors in a positive territory today. And again, you can see that all 3 markets ended down, but we were up just a little bit, again, until the close. Nothing on the earnings front. We did have an upgrade on Amazon, the price target, and that kind of goes with what we talked about yesterday with retail posting better numbers and Amazon having a lot to do with that as far as the holiday sales. Tomorrow we have Chicago PMI, we have crude inventories. And again, we're getting closer to New Year's Eve, and there was nothing today. We stayed in the opening range for the most whole day. I'll try to show that to you guys. Again, any trading should be on simulation. Try some new strategies, learn some new things. Like I'm focusing on hike and ashy candles. That's what this week should be about. As we start with our overview of today's market, we can see again, kind of got to push off the open. And you can even see at the 10 o'clock, we really didn't get a reaction. And then suddenly around 10:30, we got a sell-off on all 3 of our markets. But again, as we did our normal drift higher in the afternoon, one thing that was interesting to me, again, I shut everything off at 3:30, and then boom. So that was certainly interesting. And even with a positive day, which was positive, we were up 20, 30 points here. Look at our Rubik's Cube here, and we can see that we had a kaleidoscope. We have greens and reds. We have Apple red. Look at our financials red. No leadership in the financials. As financials go, so go the market. Google, Apple, Intel, some of our big IBM, our big NASDAQ stocks weren't doing anything, so there went the market. We actually had a higher declining number. More stocks went down than up. We still have stocks making new highs. Look at that, 95%. And we still have 70%. That's still one of our higher number of stocks above the 20 moving average. So there's today. We are not going, just like yesterday, we're not going to look at our market internals because it's such light volume. There's really no need, really. As we look at the daily charts, as I said, we're not going to look at the market internals because of the low volume. Look at the low volume on the NASDAQ, lighter volume. We'll switch down here to this is a Dow Jones. I'm sorry. Switching over to the NASDAQ. You can also see the low volume, and we actually talked about for a little bit with the NASDAQ that the volume wasn't so bad except for last Thursday, but volume lighter. And also taking a look at the S&P 500 on the volume there, we can still see lighter volume. Let's go back to the Dow. On the daily, you can see that we are still just a little bit above the breakouts. We used originally 10,500 as a breakout. We are still just a little bit above that. But again, it's on lighter volume, and we know that an uptrend like this on lighter volume typically is bearish. So could the traders come back next week and push this right back down? Certainly they could. Maybe they won't. Just switching with the monthly chart, you can see again we are still at the 50 moving average, and we were using, if the market wants to keep going up, we were using this as our next target, which was about 10,900, 10,000, about 10,900. Now switching over to the NASDAQ, we can see that we had this up move, and the volume did go down, not as bad as the Dow and the S&P 500, but we had this huge move. I mean, really, where did that come from? So we are certainly out of range, and anytime we have a move like this, we do need to come back to our moving average. We're still way above the 5 moving average right here. And then when we switch over to the monthly charts, we can see that we're well above the 50 moving average, and we used this as our next potential target area, which is basically right where we are. Basically right there. So we just got a little bit more to go there, as we already taken out this right here. Again, when the traders come back next week, what are they going to do? Finally, we'll go over to the S&P 500, and we can see it's similar to the Dow, above the breakout range that we had. We had this breakout range at 1120. We did that. Great. Now where are we going to go? On the S&P 500, we are not at the 50 moving average on the monthly chart yet, so there's certainly a target there, almost there. And as we talked about for the past couple of days, on all of our up moves, we're almost retraced this whole move down, and on the NASDAQ we already have. And once again, in talking about my light volume, this is the first week ever that we've had the S&P 500. Now I have a couple stocks as far as the average daily range, how wide the range was above the S&P 500. I do want to point out one new thing that we're going to be doing for 2010. Most of you know that I started off with stocks and options, and even though I'm really focusing as far as investing for myself on futures on a day-to-day basis, I still have several investments in stocks. And so what I'm doing is on Facebook, and my name is Michael Glass. That's where I have all my Accendo Trader stuff as myself, at Michael Glass on Facebook. And they have the Kaching Investing IQ app. And what I'm going to be doing is, if you want to follow me, view my portfolio here, also updates on Twitter for 2010 on what I'm investing, start off with X amount of dollars. And one of the cool things about Kaching is, if they have what are called geniuses here, find a genius. You click on that, you find people, you can see how well they're doing for the year, and then you can open an account and have it traded exactly like that genius. It's a pretty cool app, pretty cool website, Kaching. So that's one of the new things we'll be doing for 2010. So for our stock folks, check me out, see what we're investing, and as I said, if you like the strategies, you can open an account and they'll trade it exactly like the genius of your choice. So as we go to our education portion, and again, this is a shorter video. I know some people weren't happy and rated the video one way because it's short and there wasn't a lot of meat in it. There's not a lot of meat because this week doesn't have a lot of meat. So we're not going through all the charts. We're not going through all the segments. We never go through. Really just kind of give you a snapshot of what happened today, some of the things we're going to be doing next week. And as I told you, I got some videos coming out over the weekend that really help you jumpstart your 2009 trading. So, it is what it is. So we're here. Trading in the Zone, Mark Douglas. We're on Chapter 8, working with your beliefs, and now we're talking about the terms. And we've been talking so much about anything can happen, and not allowing your mind to get so wrapped around the patterns having to happen, but more importantly, that anything can happen. And so we know that for traders, the ultimate goal is to make money. I mean, that's what we do. But where a lot of traders kind of fall off the cliff is that ability to repeat a winning trade, consistently getting into winning trades. Being able to repeat that is what tends to hold people back. Why? Fear is what we talked about yesterday. And when you're able to kind of put aside the fact that you're trying to make money and focus on the skill of trading, and obviously with trading the zone, the psychology of trading, you're then able to begin to set the process in place to begin repeating and replicating your results on a consistent basis. Consistency is about having the right mindset. Consistency is about being able to take what the market's willing to give you at any moment, this quote-unquote now moment, the edge. And until you're able to let go and just click the mouse based upon your system, you're not going to be able to repeat. You're going to have internal battles, and you're going to lose money. Would you believe there was even a positive trade today, even though you should be trading? Alex caught a positive trade today, and it was wow. Today was interesting. E-meeting broker, $300, 23 contracts. I'm real excited. I've been using this broker for another platform. Real excited about doing some more trading strategies using this 300. And we have a futures trading plan. There was a great webinar today going over the trading plan. More to come soon, so go ahead and pick that up. And happy holidays for those of you who may not come back before the weekend. And Merry New Year and all the other good stuff. And Trade Your Own Risk. I'll see you next time.